Donald Trump promised a lot of things regarding lowering people's insurance costs. And even though insurance is regulated at the state, not the federal level, let's talk about some of the things that it looks like he may do, or at least are being considered, and what effects they could have in the coming years. I'm compiling two different articles from the Insurance Journal to kind of help us sort through these things. And I'm sorting a list by pros, cons, and, well, kind of depends. Now, starting off in the pro section, I need to say this is pro for the insurance industry. It may not directly result in improvements for us as consumers, because starting right off out of the gate is corporate tax cuts. Yes, if an insurance company is operating in the red, they're losing money consistently, they will raise prices far more aggressively than an insurance company that is operating in the black. Obviously, tax cuts will help corporations, get in the black. For everyone furiously typing corporate greed, just remember, an insurance company that has been operating in the red, losing money consistently, they're going to be more aggressive about price increases because they're in survival mode. Whereas an insurance company that's operating in the black, that has made money consistently, they're going to be thinking way more about retention, keeping the business around so they won't be as aggressive with price increases. And this next one I am calling a pro for the insurance industry, though people may disagree with me, is the possibility of removing the FIO, Federal Insurance Office. The reason why I'm putting it in the pro column, and you're welcome to disagree with me, is because 9 insurance commissioners from 9 different states have already asked the now forming Department of Government Efficiency to remove this entity. For some context, I'm a 4th generation insurance agent, and both myself and my father, who's been doing this longer than I've been alive, have never interacted or even seen anything from the FIO that has affected any of our clients. They are the ones that administer the terrorism coverage that was introduced after 9/11, but let's be real. How many times does terrorism coverage pay out? How often does that helping the average consumer? Is it possible that maybe those administrative services could be absorbed by another entity? Probably. First one in the con list for me, and is really hard to argue against, is tariffs, in particular against Mexico. The chief economist at the Insurance Information Institute stated that around 38% of our car parts come from Mexico. You think it's expensive to repair your car now? If there is a supposedly 25% tariff on Mexico, that is going to make every single repair cost jump up a lot, claims costs jump up, insurance companies will then be passing it on eventually to us. Another under the con column was something brought up by the professor of finance and insurance from the University of South Carolina, and that is the cutting back or complete removal of the NOAA. Because one thing in particular that the National Oceanic and Atmospheric Association does is weather modeling, real time. Their analysis and forecasting is a really huge part of how insurance actuaries build out risk models, how they predict where storms will happen, how bad they will happen, so that way they can actually charge appropriately for what's going to happen, especially in a time period where we've seen more storms, wildfires, things of that nature in more places that we haven't seen before. Removing a huge information source like that seems like a big miss. And these last couple of things I'm putting under it depends, because I'm not convinced one way or another. Like, for instance, the cutting back on FEMA or removal of it. I know that there's some talk about, privatization, or maybe just restricting what FEMA does. Just like the economist from the Insurance Information Institute stated, FEMA is going to have a hard time responding to a flood or disaster that will happen in the next few years, and then it will be a black eye on the administration, and maybe very well so. However, an adjuster that I know, and this is always stuck in my head, is when we were chatting one day, he mentioned how he's like, oh yeah, flood adjusters, they make more than anyone. I think he was describing deep into 6 figures. Now, it's definitely hard work moving from disaster zone to disaster zone, working really, really long hours, but deep into 6 figures. It kind of tells you how there very well could be some waste. I mean, adjusters on here, if you're adjusting an auto claim, are you making deep into 6 figures? Maybe there is something there that we need to address. And the other thing about poor claims handling is that FEMA has a bad reputation for handling claims well. As a matter of fact, one of the things that we changed in our office, we changed who we're selling our FEMA through, because one of their big selling points was that they actually handle the claim. They actually don't just let FEMA do whatever they're going to do. because of the bad experiences that a lot of people are aware of. And these last couple of things are kind of interesting because cutbacks to the Federal Trade Commission would mean that there's less pre-work on mergers and acquisitions. And so businesses that are merging or acquiring, there'll be less involvement, but then the regulations don't stop, meaning that businesses may have much higher costs for directors and officers coverage because the regulations could all of a sudden hit out of nowhere, where instead there being a lot more involvement of the FTC in the midst of a merger or acquisition. But on the flip side, if they're cutting back on the Securities and Exchange Commission, that will mean a little bit less regulatory action on things like mergers and acquisitions, which would then make directors and officers coverage a little bit less risky. So it kind of depends. We'll see what happens.